From Ticker News, right now, the global view. This is Ticker News Insight.
Hello and welcome back to Ticker News Insight, where we are looking to focus on the best of business with some clever minds joining us from all around the world. I'm your host, Mike Loader, and to my latest story for the moment. And Keith Weiner is the founder of Monetary Metals, a different kind of gold company. In these days of failing paper currencies, Monetary Metals offers investors a yield on gold that is paid in gold. Keith joins me now to tell us more about this exciting prospect. It's good to see you, my friend.
Good to be here. Thank you.
So how and why might an investor use gold as a hedge to sidestep the failing yields of paper currencies that we're seeing at the moment? Obviously, things are up in the air for so many.
Well, no matter what if you make a conventional investment, no matter what it is, you're still exposed to that paper currency, and gold always has been the way out. So people turn to gold because, I just think you don't need to be a PhD in economics to see there's something wrong in the paper system. And, yields are very volatile, which means if you bought bonds last year, you're sitting on huge losses right now. But generally, there hasn't been good yields to be had. So people turn to gold. They always have.
Now, traditionally, gold has not been an interest-bearing investment, as I understand it. How do you account for that when you're working with your clients and helping people out?
Well, traditionally, it always was until the European powers, starting before World War I, decided to sever their currency's ties to gold. The U.S. continued on the gold standard until 1933. And then many of your viewers may not know this. They made it illegal, as in a felony crime, as in go to prison, the way today if you possess certain white powder, go to prison for possessing gold. And then they re-legalized it in 1975. But at that point, 2 or 3 generations had gone by. It was forgotten. It was neglected, and it became a bit of a joke. They said, "Well, let it trade on the futures market with frozen orange juice and pork bellies," and so it's been sort of derided ever since.
It's an interesting thing to consider when you look back at all the history of it. But why are so-called alternatives like gold presently in demand, based on what you've seen out there, Keith?
Every government in the world has gone mad in terms of their fiscal policy. We had this COVID disease, which is a fairly serious disease for those rare few who were susceptible to it. But every government in the world locked society down, causing, countless layoffs. And they said, okay, that's fine. Nobody has a job anymore, but we'll just pay them free money. So the fiscal policy was mad, followed by the mad monetary policy of, okay, well, we'll just issue more currency to cover it all. And I think anybody looking at that has to become uneasy as to the value of their paper currency. And right now, it's the turn of everybody outside the U.S. to see the value of their paper currencies really falling. The Aussie dollar fell to about 61 U.S. cents. It wasn't too many years ago with more than one U.S. dollar. So that's like a 40% loss. And if you held gold, it's pretty simple math. You did a lot better than if you held Aussie dollars.
100%. So, Keith, last year, Monetary Metals issued the first gold bond in the United States in 87 years. How did that go for investors?
They got 13% interest on their gold, paid in gold. So if you put 100 ounces of gold in, you got 113 ounces on an annualized basis. The bond actually paid off a little bit early. It was a little bit less than that, but every investor was paid in full, the principal and the interest. So I think they're pretty happy.
Pretty happy. You got to be happy with that. So Monetary Metals has helped finance some Australian mining companies as well, I understand. How has that gone for investors? And could you give us a bit of insight behind those stories?
That 2020 bond was for an Australian gold mining company called Shine Resources. They're in Western Australia, just outside of, I don't know how you say it, Kalgoorlie. I probably got that totally wrong.
No, that's good.
Your listeners
Kalgoorlie.
American accent. But we just issued a new bond now for a Norwegian mining company called Akobo, and their asset is in Ethiopia. That one is paying 19% to investors. Again, gold on gold yield.
Absolutely. So it's interesting times ahead for you and the team. But Keith, I want to thank you for joining me on the program and, of course, bringing all of this down under as well. But that's all the time I've got for you for the moment, and hopefully we can connect again down the track to find out a bit more.
Thanks so much.
And of course, thank you to all of you for tuning in. I've been your host, Mike Loader. Be sure to head to tickernews.co for breaking news from all around the world. I look forward to seeing you very shortly. I'll see you again soon. Be well.